After what seems to be the toughest week for Tesla and its investors, it now looks like there's a reason for the constant drop in Tesla shares. The car company's been through a series of downtrends in the past few weeks, from reduced deliveries to lower than expected earnings, and now another sale of Tesla shares by the company's CEO. This begs the question, have we finally reached the lowest point for Tesla stock? Hey guys, welcome back to Everything Tesla stock. Tesla's been down more than 50% and was the 465th worst performer this year in the S&P 500. Although Tesla stock has been recording rather impressive numbers in terms of revenue and sales, these values have not really reflected in its stock price. The company's stock prices continue to drop in spite of Tesla's operating leverage. Despite the net new borrowings of 7.82%, Tesla has managed to improve the leverage ratio in the third quarter of this year to 0.85, above the company's average leverage ratio. Although Tesla is only minimally profitable right now, it still benefits from operating leverage, which will make the automaker enormously profitable as production and sales continue to grow rapidly. Tesla also enjoys the benefit of being the first mover in the EV space. No doubt this advantage is going to slowly diminish in the long term, and the car company will need to maintain its cost advantage to achieve its goal of selling more vehicles at higher profit margins. However, if it keeps up building on its innovation, it may continue to enjoy this advantage, but this will require a lot of effort from the car company. Will Tesla stock continue on a downward trend? Keep watching to find out. But before we start, if you like this type of content, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Tesla's fundamentals are still intact, and the company's 4680 battery cells are coming faster than expected. Back in 2020, Tesla CEO Elon Musk announced that during the company's battery day that a new battery cell is being developed to lower costs. This battery is said to significantly increase range, reduce production costs, and enable power-consuming future products like the Cybertruck and semi-cargo hauler. But after 2 years of this announcement, the production ramp for this battery is still in its early stages, despite Musk's prediction that Tesla is going to be making enough new batteries for 1 million or more vehicles. In April, some sources disclosed that Tesla is only halfway towards its goal of making larger battery cells in the quantities it needs to meet future production goals. Tesla also admitted that there are several parts of the process of producing the cell in volume that have been harder to deliver than expected. However, Tesla is now forecasting significant output by the end of the year in anticipation of a mid-2023 Cybertruck launch. According to the car company, it's making a decent number every week and will likely be in high-volume production by the end of the year. Tesla CFO Zachary Kirkhorn also disclosed during the conference call that followed the release of Tesla's Q3 financial results that the 4680 ramps are going well, with total output up 3 times quarter over quarter and production tracking to exceed 1,000 cells per week this quarter. Before we continue, if you're looking for a good way to find stocks on the stock market, here's something for you. Some investors find it difficult to identify the right stocks for them and also monitor the growth performance of these stocks. That's why it's a crucial step before you invest. This is why we're happy to announce that we're partnering up with Moomoo to provide you with an easy-to-use platform to trade stocks and connect with other traders. Moomoo is an online trading platform that allows users to monitor market movements and perform deep analysis while trading. With Moomoo, you can invest in ETFs and options, and can also practice investing without using your money via paper trading. This platform has over 19 million users who have access to AI-powered investing tools, real-time data, and investing communities. What's more, Moomoo is giving away free stocks for $100 to $2,000 deposits, and for its 10-year anniversary, Moomoo is also giving a $10 cash coupon to its new users. When you sign up and deposit using the link down below, you're going to get a $10 welcome gift. This is a limited time offer, so we can't guarantee that it's going to be around a month from now. Sign up to get this offer. And now let's get back to the video. Although there are a lot of expectations surrounding the 4680 battery cell, Tesla is not dependent on the cells for this year. Musk has previously clarified that Tesla is currently making its cars with the 2170 cells. The Tesla CEO further emphasized that Tesla has enough 2170 cells to satisfy all vehicle production for the remainder of the year, and so it's not dependent on 4680 cells. Although it has been a tough year for Tesla, the car company is still maintaining high value for its deliveries and revenue. Tesla has not had a proper quarter this year, as there have been significant headwinds in every quarter, and there were factors beyond the automaker's control. Tesla delivered fewer vehicles in the second quarter than analysts had expected. As the Wall Street Journal reported, the 254,695 vehicles that Tesla delivered to customers fell by 9,395 and were below the FactSet analysis consensus. This drop in Tesla's Q2 deliveries was reported to be as a result of the expected and extended shutdown in China, supply chain disruptions, and challenges associated with opening 2 new factories in Germany and Texas. Tesla also recorded lower deliveries in Q3 following several logistics issues. The car company reported deliveries of 343,830 vehicles in the third quarter, which was below Wall Street forecasts of 358,000 to 371,000 vehicles delivered for the quarter. Most of these factors had not only affected Tesla's deliveries, but also the car company's stock price. Musk's recent sale of Tesla shares had plunged the stock price amidst the several drops in the stock. Tesla shares dropped more than 7% after Musk made this sale, and closed at $177.59, Tesla's lowest stock price since around November 2020. According to 3 filings with the United States Securities and Exchange Commission, the sale of 19.5 million Tesla shares was worth close to $4 billion. While Musk did not say on Twitter the reason for why he sold these shares, it is possible that the money went towards his $44 billion deal to acquire Twitter. Although this has raised a lot of dust amongst Tesla investors, it is hoped that Musk won't have to sell any of Tesla's shares in the future. The automotive industry's revenue gross profit has also increased over the years, and Tesla will be a major beneficiary of this. Aggregate net sales and net profits of auto companies rose 12% and 15% respectively year on year in the first quarter, even as the chip shortages, increase in raw material prices, and declining demand crippled margins. The global automotive manufacturing market was worth about $2.86 trillion in 2021, and the market is projected to grow to about $2.95 trillion in 2022. Tesla also ranked as the most valuable automotive brand worldwide as of June 2022, and fell within the 15 most valuable brands across all industries in 2021. That same year, Tesla led the plug-in electric vehicle market in sales. Although there are speculations that Tesla may have lost demand in some of its markets, the automaker still leads in terms of vehicle production and delivery. Tesla recently cut prices for its cars in China, signaling an intensifying competition in the world's largest car market. This move provoked a slump in the company's shares as the stock price fell more than 6%, possibly due to fears among investors that the car company's profitability and dominance in the EV market were threatened by slowing economic growth and increased competition. Until recently, the strong demand for Tesla's cars has actually allowed the company to frequently raise prices. However, it is possible that the car maker cannot continue to do this. Tesla faces high competition from China's domestic companies BYD, SAIC Motor, and NIO, which are all pushing into the European markets with affordable electric vehicles. But there's no doubt that this competition cannot push Tesla out of the Chinese market. Tesla's got several buffers of safety that are needed for tough times like this. The automaker can reduce prices and still make profitable sales. Despite several episodes of price hikes, the company's gross margins and profits are still soaring to record highs. Tesla had blamed these hikes on raising costs due to inflation, increased costs of raw materials, and raising expenses with logistics. The concern may be, what if the economy goes into a longer recession and the stock market continues to slow down? In such a case, Tesla will most likely scale through the difficulties, since the car company has found a way to reduce the cost of production by half. Tesla also has a deflationary product, on which, in times of deflation, will still attract enough demand across its markets. ARK Invest CEO Cathie Wood once said that in times of deflation, only companies with a competitive innovation edge can thrive. Wood added that the decreased economic growth will prompt a shift back to the type of companies that can grow regardless of the economic backdrop, which is where Tesla has an advantage over several of its competitors. Tesla has been impressive in terms of innovation and will most likely continue as long as it exists. Do you think so? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on the next video on your screen. See you there.